Good afternoon, everyone. Thank you for joining Harvest Point here for our 2026 Tax Tips webinar. We're excited to share some great information with you today. Taxes get the best out of everybody, is what I hear. So we've got some really thrilling stuff to share. But hopefully, this is going to be very, very good information for you as you make some decisions for this upcoming tax year, and even maybe as you reflect on 2025. So, we're looking forward to getting started here today. I am your gracious host this afternoon, Jacob Olson. I'm a wealth advisor here at Harvest Point, and we're excited to jump into our agenda. So today we're going to be starting with a brief introduction on Harvest Point for those who may be unfamiliar with us, and we'll check in on our charity partner and a brief highlight there. An organization that is a really great one and doing great work in the lives of Central Iowans here. I'm going to share a brief market update before turning it over to Tim to share our tax tips and the bulk of our presentation here today, along with updates to keep in mind for planning considerations in the upcoming year. Cameron will take over from there and share how to access your tax documents via Account View, and then also share a couple tips on how to use some well-known tax software as you file this year if you do it yourself. And finally, we'll wrap up with some Q&A, and Tim and I will and Cameron will take any and all questions that you have throughout. So we're excited to get started with that. Now, our charity partner for this webinar, really as a thanks to all of you for joining us, we are able to donate to Harvest Academy. It's a nonprofit that allows men who have dealt with incarceration, homelessness, and substance abuse to turn their life around. It's free of charge, and it's at minimum a 2-year program, and some will stay on for a third even and be a mentor to guys that are just starting the program. And interestingly, a couple years ago, I had a chance to be on site at Harvest Academy over in Indianola. And boy, we got to hear some testimonies from the guys who are currently in the program. Now, all of them, my understanding is, actually applied to join the academy and join the program mostly from prison. And so they get accepted based on their willingness and their desire to truly take advantage of the program and turn their life around. And a couple of these people who are in their third year mentoring some of the younger guys, they're going back to their families as renewed husbands and fathers and leading in a way that they certainly were not before. And so it's a really great program. It's almost like a military. It is the cleanest facility I had ever been around. They cook all their own meals for each other. They've got this moving company that supports some of their operations. So really cool group, and one that we're honored to help support today. If you do have questions, and as you do, please send them to info@harvestpointwm.com. We are monitoring that inbox throughout the webinar, and we will answer all of your questions during the Q&A session. So please send them there. And we're talking about a lot of tax information today, some planning ideas or strategies. But reminder, we are not tax preparation professionals, so do consult your tax professional before implementing any of these strategies. This is more general financial advice and not specific to any one person's situation. So just keep that in mind as we move forward. Harvest Point exists to faithfully guide and equip our clients to wisely steward the wealth that has been entrusted to them. And man, what a job that Tim and Kathy Collin have done over the years and decades for so many of our clients that we're very grateful to serve. So we're very proud of our mission here. Here's a slide with, I love this slide, some really great information about our firm and why people choose to work with us, for those who may be unfamiliar, and even to current clients, some interesting numbers. But two that I want to highlight are not even fun quantitative numbers, but really have to do with how people experience our firm. And that first is the direct access over there on the left side of the screen. We don't believe in 1-800 numbers or calling into a robot to direct your call to your advisor or someone to help you with an online access item. We really want to deliver a best-in-class customer service experience for all of our clients. It's something that is increasingly difficult, it seems, today. We experience it ourselves when we call into these insurance companies on behalf of clients and trying to get some work done for them. It just can take so much time. And even service providers, getting them out to my house or something like that, it seems they're more often than not, I'm talking to a robot first. So certainly not how we want our clients to experience our firm. And it kind of ties into that second or that on the bottom there, being local. I would consider it kind of a human experience that we want to deliver in an era, in a world that is increasingly digital and not tactile. We want to be in person as much as we can with our clients, especially those here in central Iowa, and be face to face and talk on the phone with one another. So a couple of things I wanted to highlight here on this page. And here is a great snapshot of the team that you are talking to on a day-to-day basis. Here at Harvest Point, of course, everyone knows Angela down on the bottom left as sort of the first person a lot of people get to talk to, and what a sunny face she is and voice. She's such a fun individual, and man, she has so many conversations with many of you I know that are just really great relationship stuff. So. And then on the top here, we have a lot of our advisory team and client service folks that may have a more technical expertise. Cameron, of course, helps a lot of you with online access. Lucas is increasingly as well. And then me, Tim, Colin, and Laura being on the advisory side, mostly in meetings and talking about the financial placing trades, things of that sort. So that's your team right here at Harvest Point. A couple of barcodes that you can scan from your phone and let us know if you have any issues with them. On the left is our Discovery Questionnaire, and not something for our current clients to fill out, but if you've got a friend or a family member who could maybe use better service, or maybe they're approaching a period of their life that they need some plannings being done, they have more questions and maybe they're getting answers to right now. That Discovery Questionnaire form is a great thing to send to them if they have any interest in getting a second opinion from someone here at Harvest Point, from our team. And then on the right is a great opportunity, as we appreciate so much our clients leaving reviews. It helps us to know where we're serving them best and how we're doing that and what's most valuable to them. And it also helps folks who are searching us online and may have heard of us through the grapevine to show support that we are doing good work for our clients. So if that's you, we really appreciate any kind of review that you're willing to give us there. The client is the most important person in our company. And this is so true, and something we try to impress upon not just ourselves internally, but even to our clients. We are so fortunate to have jobs. For me to sit here on a webinar and give a presentation, help to facilitate a presentation on taxes on behalf of our clients. We don't get to do this if we're not working for you. And it's truly a pleasure and an honor to do so, and something that we take with a lot of serious and sincerity too. With that, we will jump into the market update. So I've got 3 charts prepared today. And we're not going to cover every single talking point that you might see out on the news or on CNBC or something like that. But I wanted to touch on 2 things that have come up in my own research that we see here internally, and then conversations that are questions really that some clients will have about what we're looking out for in 2026. So this first chart is one that we will even come back to, and it's a chart that's showing the strength of the U.S. economy. Or another way to look at it is the likelihood that we are entering a recession. There's been a lot of talk about that since 2022. And what I want to draw your attention to first, and maybe the biggest takeaway from this chart, is that arrow on the right side of your screen that says this is reasonably strong territory. This is just one metric that we monitor and look at here at Harvest Point when it comes to a macroeconomic view of our economy. What I like about this one is it shows in these shaded areas where we have been in recession. And that all the way on the left side of your screen in the 2000s, there is the dot-com bubble. And the next one would be the financial crisis and then COVID. And what this metric here is showing is as the economy worsens, this metric does a good job of tracking the likelihood of recession into that yellow area. Every time that we're getting close, this has done a good job of showing that we are, and then it stays true really through that shaded period. And as it increases, and that's when we're exiting the economy or exiting the recession. So the point here is that this metric does a good job of tracking what has historically happened. And so we have a reasonable amount of trust that we are in a good spot. And while there are always going to be one or two variables that might be concerning, as a whole, our economy is in a strong spot for 2026. So that's the big takeaway from this chart here, as you may hear otherwise on the news, as people try to cause fear and confusion. So we can jump over to the next one. And point two that I want to talk about is there are concerns that there stocks being at an all-time high, and maybe the price is justified, or maybe it's not. More so, what you're going to hear is that the prices are unjustified, and we're at record levels of individually priced securities. Certainly, cause for monitoring or a cause for digging deeper into, and that's what this chart does here. So a lot of what prices do, at least on the stock market, have to do with future earnings potential. Rarely is it just for a company's value today, but it's what could this company become tomorrow? What are they going to be producing tomorrow and in years to come? So all number of asset management firms have analysts whose full-time job is to look at that data and try to project forward what these companies are going to earn and produce from a profit standpoint, which is largely going to dictate what their price is today. So what we're looking at here is 2025 EPS. This is another way to just think of earnings or profit expectation, earnings per share. At 271 in 2025, what these analysts are projecting for 2026 is for that to climb fairly significantly up to 309. And then even looking forward to 2027, another big jump up to $355. And so the takeaway from this chart is that while stocks are at an all-time high, and we are seeing fairly expensive, at least historically, equity prices, it's not without reason. It's not without justification. And so what we are just monitoring here internally, maybe what if you're someone who watches the markets and reads up on the stuff a lot, what you would be looking at is ensuring that these earnings reports that come out quarterly come back accurately, or that these analysts aren't way off. Something that we're all looking at every day and every quarter as these come out. But as long as these analysts aren't completely foolish and missing out on their jobs and looking ahead, then we've got some reasonable justification for equity prices where they're at right now. So I want to dispel any notion that we're in kind of uncharted or unreasonable territory. And then this third chart is a real interesting one. Increasingly, the stock market broadly is dictated or at least influenced more heavily than it had been in the past by federal policy. And we're seeing some interesting times geopolitically, especially. Of course, we had the tariff kind of crazy times that were going on in April of last year. There's more talk about what could be going on geopolitically as well in 2026. So something I wanted to highlight here in this chart, what we're looking at is the S&P 500 or broad stock market performance when we're at record highs like we are today after the Fed cuts rates. What we're hearing from a lot of analysts that we listen to across a number of firms is that the Fed is expected to cut rates again. Even though the economy is in a fairly strong spot, they are expected to cut again. And what this chart is showing is what happens when the Fed cuts, when the stock market is at a record high. So it's kind of exactly what we're looking at in our world today. And when there is no recession, we've seen 18 on average, 18% return since 1984. On average, it's 13%. And then on the downside, when there is a recession, it's at -3. So this was going to tie back that first chart. If we go back to that for just a moment, this is why this number is important, why this chart matters, is if it's true that our economy is not in a recession and it's likely that we are not going to move into, then we have a reasonable assumption historically to see that to expect positive returns in the market. Will it be 18%? We can't guarantee that, but we can have a positive outlook for 2026, especially if the Fed does cut rates and the economy doesn't enter into a recession, which is unlikely. So those are the main pieces I wanted to talk about here on this market update. And now I'm going to turn it over to Tim to share our tax tips for 2026.
Thank you, Jacob. And I just want to extend the welcome today to all of our clients on the call, joining us from many states around the country, as well as prospective clients, maybe folks, guests who are just getting an introduction to our firm. So I want to say thank you to our existing clients for bearing with us through part of that introduction. We know that you have heard or seen many of those aspects that Jacob presented on in the introductory portion of our call today. But actually, it is of value. That's the feedback we have received from you over the years. For those who are maybe new to our firm, it's sometimes a webinar like this can be the first time that someone has exposure or introduction to our firm. So again, thank you for bearing with us, and thank you to our guests, maybe first-time attendees, for joining us today. I do want to continue with maybe some recognition. So Jacob is actually finishing his studies for the CFP. So he's a candidate and will be taking that exam here in the coming months. So keep him in your prayers. Well done, Jacob, for living out our core value of excellence, continuing to press into becoming an expert in our industry and trying to stand out in that regard. So nice job to Jacob. Of course, we have Lucas, one of our newest team members, is in the background helping run the webinar today, and Lauren organized everything, got all the invites sent out. So I wanted to give special recognition to them. And then I have two toddlers at home, Nora and Catherine. They're 3 and 2, and they're enjoying their lunch, their PB&J sandwiches right now. And so I have to say hello to them, otherwise I'll get in trouble when I get home. So hello to Nora and Catherine. Well, today we get to talk about taxes, and really, we have no excuse. Sometimes people say, oh, who wants to talk about taxes? We have no excuse. If you're in the Midwest, like I know many of you are, it's way too cold to be outside. So let's just bear down and rip off the Band-Aid, and let's get into the tax topic today. And really, all that I want to do is provide initially some dates and deadlines, and then I am going to talk a little bit about maybe some specific parameters, some new items for 2026 to be aware of, some aspects of the 2025 return that we'll want to perhaps make your preparer aware of. And then I will, after that, get out of the way for our senior client service specialist, Cameron Jensen, who's going to talk about some practical applications. How can we access documents? Where can we find them? Who do we call if we can't? Really, the executive summary of today is, if you have questions with regard to preparing or gathering your tax documents to give to your preparer, just call us. We are here to help you. And oftentimes that call can save you in the long run from an amendment potentially, because sometimes unbeknownst to you, you gather all your documents, you take them to your tax person, and lo and behold, you're missing a form in that stack of documents. Well, we can help you try to alleviate that possibility from happening. We have a ton of data on our side, and so call us before you go, and we can help give a second thought, maybe poke some holes in, make sure, ask some questions, make sure you have everything you need to go and file your taxes. So the deadline for the 2025 tax return to be filed, unless you are going to file an extension, is April 15th. So everybody pretty much knows that date. Sometimes it falls a day or two later than April 15th, but this year it is on the 15th. So we have plenty of time, but you'll want to be starting to keep an eye out on the mail. Most of our clients do receive their tax documents in the mail. Many of you have elected to receive them electronically, but very soon, within the next couple days, if not already, those have been starting to get sent out to you in the mail or made available in your online access. Don't panic if you don't see anything quite yet. We have basically about another week here or so where that will be occurring. But some important mailing dates to be aware of. If you have not received a 1099-R, which would be corresponding to any withdrawals that you've taken from a qualified account or maybe even potentially an annuity, that would be something that you'd want to make sure you have by the first few days of February. And so just keep an eye out with that timeline there. If you have a non-retirement account, so not an IRA, not a Roth IRA, call it a transfer on death account or a jointly owned account, perhaps with the spouse, those tax forms are referred to as the 1099 consolidated statements. Those will typically come by mid to late February. Sometimes that can extend into March, depending on what you own inside of that non-retirement account. So don't get alarmed if you don't have that by the end of February. Give it another week or so. But if you're pressing up against the middle of March, definitely reach out to us, because in all likelihood, we can track that down for you. One interesting note on mailing dates is how great of a job LPL Financial does in generating these tax forms. I went ahead and pulled the data from last year, and last year, if you can believe it, on January 17th, over 1.1 million 1099-R forms were set to be delivered and sent out. So they have a very high volume, which actually makes what I'm about to say even more impressive. By March 7th, they had sent out 96% of the 1099 consolidated statements. So a timely delivery in that regard. And then they only ended up with a correction rate of less than 0.5%. So less than 0.5% required a correction, which again, accounting for the volume, is a really good thing. So I do have to commend LPL for their timely delivery of and accuracy of the tax forms when they come out. We know that's important to you, and we keep an extra vigilant watch on that this time of year to ensure that you have what you need to file your taxes. A little bit more on the 1099-R. If we look at that in more detail, I just want to point out a few things so that you have a little bit of an idea of what that will look like when you receive it. So in the upper left-hand corner there, you'll see 1099-R. We have an example here from a couple years ago, but everything else remains true. In that box 1's your gross distribution. Box 4, you'll see the federal withholding. And then in box 14, if it applies, you'll see the state withholding there. Really, you don't need to get too concerned about this unless, of course, you're preparing your own taxes, and then you want to pay close attention to it. But otherwise, if you have someone else prepare the return, you'll just be able to turn this over to them, and they will help ensure that it is put into the system correctly. Also, with the 1099 consolidated view, it will look a little bit like what's on the screen right now. So it's different, it's longer, and that just has to do with the nature of the reporting. There's a lot more going on the 1099 consolidated statement, but it should be all summarized there, mostly on page 1. And they kind of line item out there. It's probably a little too small to see here, but you will receive something that looks almost identical to this. And of course, if you have any questions on it at all, let us know. One important reminder on the 1099 consolidated statement is if you closed a non-retirement account last year, and perhaps you're utilizing a new account with a new account number, you will want to make sure that you have both the 1099 consolidated statement for the existing non-retirement account as well as for the closed non-retirement account, because it will report on activity up and until you closed the account. We don't expect you to remember all of that. That is something that we are going to be making a special emphasis on as well here this tax season to keep you apprised in that regard. But it is a good point to pause on as you're pulling everything together. Yes, I have the tax forms for the existing accounts, but did I perhaps have an account last year that was existing that I don't have? One maybe trigger for that would be a lot of times, if you're like me, when you're doing and getting together all the tax documents, you're looking at last year and the packet from last year. Do I have that? Check, have that. Well, you'll probably if you did close an account, you'll probably come across one from last year's packet that you can't match up with an existing one. That would be a great trigger to just let us know. We'll get that out to you if for some reason you don't have it. But hopefully that will come out like it should, and it will not you won't have any issues on that. One form that comes out by design later than any of the forms we've talked about so far is something called the 5498, which simply just summarizes contribution information for IRA accounts. Perhaps you had a rollover, perhaps you contributed to an account, maybe did a conversion, etc. This form by design comes out by May 31st of this year. So it's after the tax filing deadline, because you have up until the tax filing deadline to make a contribution to an IRA or a Roth IRA if that is applicable in your individual situation. For those who have made that contribution by the end of last year, 12/31/2025, you should actually receive this 5498 next month. So a lot of moving pieces, depends on your individual situation. Again, summary would be check with us. If you are in the state of Iowa, like many of our clients are, just a couple quick reminders. We do have a flat income tax rate now in the state of Iowa of 3.8%. Of course, as has been the case for a couple of years now, retirement income is excluded from Iowa taxable income. And then we have some information on there for you for the 529 plan and the contribution deduction amounts if that applies to you for a child or a grandchild. Well, as we look at 2026, before we jump back to 2025, we did want to highlight, since we're talking about taxes, things for you to be aware of, maybe some key figures for this year. So now that we're into the new year, we're now kind of talk for a minute about the next tax season. I know that seems maybe counterintuitive, but we are off and running this year, and we want you to be aware of these components. So you probably are aware, if it applies to you, Social Security informed us that there is an increase of 2.8% in 2026. So you should have noticed already a small increase in your Social Security payments if you are receiving those. Some new maximums there for contributions, catch-up limits, 401k deferrals. Want to pay special attention if you're between the ages of 60 and 63. Your catch-up inside of your retirement plan actually could be higher. So it's one thing we'll want to talk about. It'll be on our radar this year in particular. If you are contributing to a Roth IRA or are maybe looking to see if you're able to, they did update the income phase out amounts for that in 2026, and those are displayed here on the screen, and we can take advantage of that if it's possible. And then the exclusion for gifts. If you make a gift to an individual of $19,000 or less, you do not need to worry about filing a gift tax return, and that shouldn't be an issue. Again, that's per person. So if you have a husband and a wife, for example, and each member of the couple wants to give a child $19,000, they are able to do that for a total of $38,000. So there's a lot of leeway in that regard, and we'll be talking about that more in our meetings. Of course, one new piece of legislation that we kind of touched on a little bit last year, but is maybe important to review, given that we are talking about taxes, would be some new provisions as it pertains to itemizing the standard deduction, a new Social Security de facto deduction called the senior deduction, and that information is here for you. So if you are itemizing, there is a new, starting in 2026, floor placed on any donations. So 0.5% of AGI is excluded from the allowable donation dollar amount if you are itemizing. If you're taking the standard deduction, you can disregard that first point. They did permanently increase that standard deduction. So for couples who are married filing jointly, that's now at $31,500, higher if you are 65 and older. And depending on your income, assuming you're 65 and older, you could potentially have access to, per person, a $6,000 senior deduction. There is also a permanently higher estate tax threshold of $15 million per person in 2026 and going forward now. And then you probably have heard no tax on car loan interest. A lot of restrictions apply to that, so you want to make sure to check in if that applies to your particular situation. We do have a kind of an exciting update, at least in the way of taxes exciting, and that would be, sorry, I got a little ahead of myself here. We're going to have, that's a teaser. See how I did that, Jacob? That's a teaser. You're going to have to wait for that exciting development. First, we're going to talk about tax changes for charitable contributions, and really just more of a quick update here. If you are not itemizing, but most folks, again, do not itemize because of that higher standard deduction, you are able to now in 2026 deduct up to $2,000 for a married couple off of your return for charitable donations. So whereas in the past, if your charitable donations did not play a part in getting you up above that standard deduction amount to itemize, you really did not need to track for tax purposes those charitable donations. Well, that's different in 2026. So be sure this year to take note of charitable donations up to that $2,000 amount and record those or have documentation of those for your tax person for the 2026 return. It will not apply for the 2025 return. This, again, is only new this year. Also, there's some, along with a lot of changes that went into place, there's a higher income cap now on the charitable deductions. And also we have back up to the $40,000 amount for the state and local tax deduction on the return as well. So it's important things to be aware of, most of which would be favorable for you. Again, it depends on your individual situation, but definitely we want to be aware of those for 2026. Well, now we can talk about that exciting update. One thing that many of you might be aware of is if you are 70 and a half or older, or maybe are approaching that age and are aware of a unique strategy that would be available to you called the Qualified Charitable Distribution, where you can take money directly from your IRA account and you can move it to a charity, send it directly to a public nonprofit, like a church, like the Red Cross, whatever the case may be. Well, it has been always been the case that is not something that gets reported on the 1099-R. Well, now, going forward, we will have a reporting code Y. Finally, they took feedback, thankfully, and instituted that. So oftentimes when clients would do a QCD, especially the first time, this is something that gets overlooked on the tax return. I can't tell you how many times we have caught that and made clients aware of that, unfortunately, and then have to have the return amended. Really, it's for your benefit because then it gets counted on the return. But now there should be a way around that with that code Y. So this is optional for 2025. We'll kind of see how and when that gets adopted by a lot of the custodians, but be on the lookout for an increasing adoption of that across the board. Still, the best practice would be to make a note internally just on your tax documents that you did complete a QCD and the amount that was. So something we'll be reminding you about, but definitely wanted to bring your attention to that new update on QCDs. Finally, before I turn it over to Cameron, just a few odds and ends on additional strategies to be aware of. So Roth conversions can be a great way to reduce your taxable IRA dollars. And that's something that we want to have a conversation with you about. The deadline for that, unlike a contribution that has a tax filing deadline, the conversion deadline is a year-end deadline. So 12/31 of this year, we would be making a 2026 conversion if we did that. We talked about QCDs. Donor advised funds can be a great way to match up your generosity strategy with a tax efficient strategy for your overall financial plan. Homestead tax exemption reminder there. We talked about the new tax law provisions, and then even with those increased match amounts, that dates all the way back to the Secure Act 2.0 provision. And then something we also touched on last year, reminder on security swaps. Charity swaps with your securities is probably a better way to put it. If you have a highly appreciated stock or fund and you also have some cash that you'd like to donate to a charity, Perhaps instead of donating the cash, you transfer in kind the highly appreciated securities. And in effect, it's a win-win. The charity gets the donation still. You are able to then go back in with the cash and have a little bit of an increase in your basis on that particular security that you own. So another idea for you there on as it pertains to investment and tax strategies. Well, I will turn it over to our client service specialist, senior client service specialist, recently promoted, by the way. Congrats to you, Cameron. And Cameron Jensen's going to walk us through maybe some more practical access aspects of the tax documents for this tax season.
Awesome. Thank you so much, Tim, and some wonderful insight there about our taxes and some changes that are coming our way. So we're going to get into the fun of how do we get access to our documents if we have account view access. The first step is going to be hopping over to our website. So our website is going to be harvestpointwm.com. If you type that into your search bar in your search engine, it should pull you right to this landing page here. If you have account view access, you're going to want to go to client login, which is circled here on the screen. Once you click that, it should pull you to our client login screen where you will see access to things like account view or your personal portal wealth management site. In account view, if you log in there, it's going to bring you to your login screen. And this is where the fun really kind of begins. As we all know, we've kind of got passwords all over the place right now. They're getting more increasing security and kind of longer. So if you've forgotten your password or you're getting logged in and you have any issues, please feel free to reach out to our office, either by email or giving us a call. And we're more than happy to help you get access to that. Once you've logged into your account view profile, you'll want to go over to your overview screen. This is kind of where you're going to land when you get into account view. You'll see documents, which we have circled here, and there's a drop down arrow there. When you click on documents, you're going to get a list of things: statements, tax forms, trade confirmations, my files. We're going to specifically focus on the tax forms section. So when you select tax forms, you're going to have all of your tax forms for this year that have been populated by LPL showing up in here. Now, that is regardless of if you have electronic delivery selected or paper delivery. They will still show up in your account view profile if you have account view access. So you'll select tax forms. From your drop down, you'll want to select the 2025 year, and all of your tax forms should be in there. If you think one is missing or you have questions about that or they're not downloading properly, please let us know. If you get to March 1st and you still haven't received all of your tax forms, which we hope doesn't happen, but if you do get in that case, reach out to us. We can work with our home office to see what's going on or why you have not received those tax forms and kind of get to the bottom of that for you. Once you have all your tax forms, you get to start playing the fun game of entering everything into your tax software. So if you're someone who files your taxes yourself through a service like TurboTax or H&R Block, you're probably pretty familiar with this, but if it's your first year doing so, no worries. On your documents, you're going to be looking for an 8-digit account number from LPL along with an 11-digit document ID number. Now, these are going to be pretty easy to locate if you have your tax documents. On the screen here, you will see the tax document for a 1099-R. They are in a similar spot for your 1099 consolidated as well. They should be towards the top of the first page. But in our example here, the 1099-R, you will see the green highlight will be your account number. We have this one redacted for confidentiality reasons, but yours should show up right there as 8 digits. And then just to the right of that, you'll see your document ID. That will be the 11-digit document ID that your tax software might be asking for. Once you input both of those, the tax software will know what document you're talking about and should pull all of the necessary information into their software. Obviously, still double check everything, make sure it pulled in the way you wanted it to, and that should resolve your issues. Once you've gotten that taken care of, you should be good to continue filing your taxes and moving through the rest of the process. If you have questions about getting account view access, maybe you don't have that currently, and this seems like something you would like, reach out to our office. We can get you provisioned for that. Or if you're having any issues accessing your tax documents or getting things entered into your tax software, again, feel free to reach out to us. We are more than happy to assist and help you kind of get through this fun time of the year. I will pass it back over to Jacob now to lead us through our Q&A questions. And again, if you guys have any other questions, feel free to call us, send them to the info inbox, and we are more than happy to help out.
Absolutely. Yeah. Thank you, Cameron. Some great stuff there. It's very helpful to have that walkthrough getting into account view to access all of those documents, especially if you need to reconcile or double check anything and maybe even print it off at home if you did get it to your mailbox in the timely manner. So we did have a few questions come through during our time here, and maybe start with one for Tim. Tim, this is Lori from Iowa asking, what steps should I consider taking to remain flexible with changing tax laws?
Sure. Yep. No, that's a really good question, especially this year, given the information that we reviewed today. Really, I think the best strategy in that regard would be to schedule a meeting. When we meet, we can apply and distill down all of these changes and determine how they impact your individual situation. It's kind of tough to obviously cover everyone's situation in a format like this. So I think the meeting, or even at the very least, a telephone call to make sure that, hey, are we accounting for everything that would be available to take advantage of? Maybe how has my situation changed in the past year or so relative to these tax law changes? I think that's probably the best way to do that. Of course, the other way too, just in your own time, to be familiar with everything that is out there information wise with regard to the updates, and seeing, kind of reading through that on your own, seeing if there's anything that might jump out. Our blog section on our website is a great resource for that. We have a number of articles with regard to tax planning when it comes to financial planning, and would love for you to check those out.
Fantastic. And we'll move to John from Kansas has a question on markets and specifically what opportunities that he could watch out for would benefit the tax situation. I think what comes to mind for me, anyways, is if I can take this one, volatility is likely, just like there was volatility in 2025, we're likely to see some more here in 2026. A lot of that could have to do with whether policy changes or things that could happen geopolitically, but that would present a buying opportunity for a lot of folks. That certainly was the case in April of last year when the market dipped down near 20%, and then we're likely to see some other dips as the market kind of figures out what might be going on over the course of this year. So keep an eye out for that. That could be a good opportunity. And then yeah, well, maybe leave it for there. Anything to add there, Tim?
No, I think you covered it. I think we are it is more likely, in my opinion, that we will have a pullback or a downturn here sooner rather than later, simply just because, being that 6 out of the last 7 years have been positive. And really, if you study those 6 positive years, even for a moderate growth investor, someone taking just a middle of the road level of risk, pretty much, it has been a double digit positive 6 years. So we are definitely running a bit ahead of pace, historically speaking. Now, could that continue, as you covered earlier, Jacob? Absolutely, it could. But I think probably more so the likelihood is we'd be probably wise at this juncture to plan for, or at least account for, the likelihood or possibility of a bit of a downturn, even though a lot of the data that we're seeing would fly kind of in the face of that. So yeah, little bit of everybody's favorite phrase, cautiously optimistic juncture in the market.
Absolutely. Cameron, this would be a good one for you. Brian from Iowa asks, how can I access account view on phone or tablet mobily?
Yeah, great question, Brian. I did not cover that in my section, so I apologize. Yes, you can access them through your phone and tablet. There is an app in both the Google and Apple App Store. If you type in LPL Account View, should be the first one that pulls up. But if you have questions on which one is the correct one, again, feel free to reach out and we're happy to assist. The only thing I will say from my experience is that the phone and tablet are great to have for on-the-go use, but they do lose some functionality. So using your computer and website tends to be the best way to get things to function as intended, but the Apple App Store and the Google Play Store do a great job of getting that on your phone and tablet, and they do have some good functionality. They just lose a little bit compared to the website.
Thanks for covering that, Cameron. We've got one more. This is from Brad from Iowa. Tim, this might be one for you again. What changes in life or accounts can trigger unexpected tax consequences?
Yeah, quite a few. Let's say that you got married this year or last year, rather. Let's say that you had a child. Let's say that you did some gifting. Perhaps you had to make a large withdrawal for one reason or another, maybe a lot larger than previous years, especially last year. If you did that, there are likely some tax consequences we're going to want to be aware of as you go to prepare the 2025 return. So the list would go on: the passing of a spouse, retirement, the purchase of a home, life change events and tax consequences, as we all know, kind of oftentimes go hand in hand. So that's all that can be a good litmus test, just broadly or generally speaking, to keep an eye on, kind of reflect back on the year prior. A lot of times these tax preparers have right within their organizers a handy dandy checklist of, hey, did this happen in the 2025 year? But that's by design. That helps then catch anything that would need to be accounted for. So those would be just some things to keep an eye out for when you prepare your documents.
Yeah. Absolutely. In particular, a number of the items you mentioned, Tim, something that would change the filing status of your return from, be it single to married, filing jointly or separately, or head of household, qualified widower. All of those things would certainly be things to be on the lookout for. So
yeah, and I'll throw one more out there too. If you are 65, especially if you actually are 65, or even recently turned 65 in the last couple of years, and you are on Medicare, you're going to want to watch your income, because if your income is up there for some reason, there can be some unexpected changes on the tax return in the for or via the tax return in the form of higher premiums that would be required for Medicare. So keep an eye on that. We do also keep a pretty close watch on that. Another similar thing to watch would be if you have health care from the marketplace, so you're not 65 yet, and perhaps your income is a little bit higher. They did make some changes that are going into place here in 2026 that we've been aware of. So that's one thing we're going to want to evaluate this year, and already have been with clients, is that those parameters have been updated and changed, and not necessarily to your favor, especially if income has gone up. Costs could definitely increase in that regard for those even prior to age 65. Doesn't apply if you're still working. You get your health insurance through your employer, but for those who are retired and on either end of those spectrums, or either side of that, age 65 rather, that's just something also to keep an eye on as we talk about changes to be aware of.
yeah, really good stuff to think through. And then maybe a follow-up question that I would have is, how often then should someone review their tax strategy, or maybe recommendations or planning that they've otherwise put in place, considering all of these things that can happen even
Yeah,
closer to the end of the year?
absolutely. I would say at least one time per year, and this is a good time of year to do it, because by nature we're forced to gather all the documents, and so it can be a great time to have a touch point call with us. Number one, to confirm you have what you need to file the return, and then number two, let's see how these changes impact and apply to you. Again, in many instances, it's a great it's been a great tax benefit for our clients as we look at the figures. In some cases, not so much, but then there are aspects, kind of as we mentioned earlier, planning tools that we can put into place to offset potential unforeseen ramifications of tax law changes. But we can't do that in retrospect, often cases. A lot of times, for example, we can't go back in 2025 and do a Roth conversion now. It's not allowed. We missed our deadline of 12/31. We can do one for this year. But that's why the earlier we know, prior to an upcoming event or well before an upcoming event, then we can kind of put the planning that we're coming up with in motion and have time to allow that to take effect.
Yeah, absolutely. All great questions. That covers it, at least that we've got in our inbox here. So we'll move on with Q&A and wrap up with a couple more points. So first thing to watch out for all of you attendees, again, thank you for joining us today. We will send a recording of this to your inbox in case you had to jump off for a particular amount of time or want to review some of the things we discussed today. So watch out for that. And we'll also be sending an investor guide, a couple of resources from LPL, really strong ones that are good for clients to kind of poke through, skim through, or at least have available to them. So we'll send that investor guide. Also, if you are one of those folks like Cameron mentioned who file with TurboTax or H&R Block, there's a guide for using both of those services as well in that tax season or in a specific guide for those. So both of those resources will come over your way along with the replay of the webinar. So watch out for that. And after the webinar closes, immediately following that will be a pop-up window on your screen, and it will ask you to fill out a survey. Please do that if you're willing. It's great information for us and feedback that we can get to improve these, make sure they're valuable for each of you who are listening in today and took the time to sit through this and listen to us talk about taxes. So please do that. It means a lot for us if you're willing, and we will look at all of that. Every individual response comes through multiple eyes and hands here on our team internally. So it's very valuable. And as always, it is an absolute privilege to serve you. Thank you all for joining, both existing clients and any prospective clients as well. We welcome having conversations with each and every one of you on questions that you had that didn't come through, you weren't able to include in the info inbox today, and didn't get covered in Q&A or through the rest of the presentation. Please reach out to us via website, contacting, or just give us a call too. Thank you much.